Hello. Who wants to unmute?
Hey, Paul.
There you are.
How you doing?
Excellent. How's everybody doing? So I am Paul Leibowitz.
And I am Nancy Morgan.
And we are from
Westport Mortgage.
Westport Mortgage. We rehearsed that.
Sorry.
So hi, everybody, and
Right,
welcome to this session of On the Road to Clear to Close. Today, Nancy Morgan and I want to take you down the road, kind of give you an inside look as to what it looks like on this side for your buyers as they go down the road to home ownership. And so Nancy and I are going to discuss kind of a chronological as you go, what we're doing, what you're doing, and how you can help. So welcome, everybody. First thing I want to do is I want to talk about that all important very first call. And that's the one that we get from the buyer who says, hey, they accepted my offer. And of course, that means you've done all the hard work, and congratulations, because it is hard work. But that's just the start of our day. And so we, to use the on the road euphemism, we step on the gas pedal from that point. Now, hopefully, the buyer has previously pre-qualified, and hopefully this is not one of those Sunday night calls where they say, guess what, they just accepted my binder and oh my God, I'd like to get pre-qualified. We like to avoid that, although we've had that many times, right, Nance? So what happens next is where we're going to go today. Now, obviously, you've got a lot of work still ahead of you because you're going to have the home inspection, et cetera. But before you guys take the buyer out for the home inspection, we're going to get rolling with the borrower on the very important first step, and that is registering and in some cases locking their loan. Now, we bring that up because it triggers a very important sequence of events that you need to know about. Today's mortgages are all digital, as you can well imagine. Everything's electronic, as you probably know. What you might not know, though, is that there's a very important document that the borrower has to literally press the button on, and they must do it before we can actually get on the road to clear to close. And that's something known as the intent to proceed. And it's just what it sounds like. They intend to proceed. Now, the buyer calls us up and says, hey, we were out with Silva last night. We found a place and they accepted our bid. What do I do now? And so our first answer to them is, we're going to register your loan with the lender, and the lender is going to send you a very important first email. And so we want you to watch your email in bin because you're going to get it. And when you get it, we need you to go in and start clicking. Now, you know, some buyers have trouble with email, but it's just the way it is today. You know, we don't have paper anymore. And so they have to go through and start clicking. And what happens is they come to a screen called, yes, I intend to proceed. All right, so that's all on the very first day. Once they do the intent to proceed, we can do a very important thing, and that is
order the appraisal. So
right,
what
Nancy,
happened? Yeah.
that?
So basically, I think I talked about it last week, but things have changed in the mortgage world a few different times since the mortgage meltdown and the rules changed. So once you have an accepted offer, I often hear, okay, when can we order the appraisal? The appraisal can be ordered after we register the loan with the lender, and then the disclosures are sent to the lender, And if you have more than one borrower, they each have to provide their own email because they each get their own disclosures to e-sign. So sometimes they'll say, I did it, but one of the co-borrowers might not have e-signed, even though they are, we all get so many emails, so they can miss those things. Once they e-sign, then we will be able to order the appraisal. And the appraisal is done through an appraisal management company or AMC. There are so many different acronyms in our world, just like in your world. So if you're not sure of something, or if you have any questions, just raise your hand and we will, or put it in the chat, we'll answer. And so we will order the appraisal through the lender or through the appraisal management company. They in turn will send out an email to the borrower asking for payment. And what we do though is we let them know ahead of time. Next steps is two of our most frequently used words here. Next steps, after you disclose, you will get an email from the appraisal management company asking you to pay. Because a lot of times they'll say, is this real? Is this legit? Once they pay with a credit card, then the appraisal gets ordered. It gets assigned to an appraiser, and then the appraiser will contact you to schedule a time to meet. And Silva had a question.
I got that. So,
Okay.
yeah, we don't need the property disclosures up front. That's not, it's not part of it. Obviously the seller has to give it to the buyer, but the lender is going to assume that you're doing that right. So no sweat there. But
But
go ahead,
they
Nancy.
also need that. We need that for the contract though. So that
Yeah, down the road, we will need that.
Yeah, typically the attorney will send that. So, yeah, so basically then the appraiser will contact you to schedule the appraisal. You meet the appraiser. Typically, they, about appraisals, but they will, complete the report. It takes them about a week to get it back to us. But before we even get the report, it goes back to the appraisal management company. They have a review that they go through, and it gets sent to the lender, and then either the underwriter approves it, or they have a different department that is like a property, that approves it. Paul, you have a question? How can I answer?
No, that's great. And I love where you're going with that. So I want you guys to recognize that we're now leapfrogging because we registered the loan and we ordered the appraisal, and now you're inspecting the property. So we're a couple of days in, maybe 3, maybe 5 days in, and you're now inspecting the property. While that's happening, while you're inspecting the property, as Nancy said, the appraisal management company is contacting an appraiser, and the appraiser is going to make an appointment. What's important about this is that if that inspection shows some new developments, let's say the price, let's say something needs to be fixed, let's say you're going to do some negotiating, this is the time to make sure that that information gets fed to us. So if there's going to be a seller credit, et cetera. So when that appraiser finally contacts you, that appraisal, that inspection should all be done. And hopefully at this point, you now have a final price, any credits, and a potential close date. That's real important.
In addition, the appraiser does need to review the contract. So we can't submit a loan into underwriting until we have either a fully signed binder, which you can give to the appraisal, or we'll submit it to the appraisal management company. If we have a signed binder, typically a binder will come before the contract. But they do need to review the contract. And if there's a seller credit in there, they do need to acknowledge that in the report as well.
So let's take a look at what we just said and figure out how many days we just went through. So if they called us on Sunday night and they're all excited because they got their bid accepted, we're now somewhere in the vicinity of Thursday or Friday where the appraisal has actually been paid for by the buyer. And now the appraisal management company, after they assign it, will be calling you for access. So you need to be conscious of the fact and build that in, that that's going to be about a 5 to 7 day turn time before you're going to get that call. and every deal is different, so sometimes it gets a little longer, but that's the gist of the idea.
Or, if I may, if what can happen sometimes is, you have your inspection, and the inspection is done before the contract. So in case there are any issues that need to be changed, they'll go into the contract, or anything else that needs to be negotiated. But sometimes what happens is the inspection happens, and there are some issues, which happens, but the brakes go on our road. And so we have to pull over, and the borrower is not really ready to order the appraisal yet, because they're like, I want to make sure I don't want to pay for the appraisal. And so before I sign the contract, or before I, do anything else. So then sometimes the brakes go on for a week or two, and then we get back on the road. And hopefully the date that you put in the binder, you'll push that date out again, because we held off for 2 weeks. We didn't do anything per request of our client, your client, our client as well. So hopefully for the mortgage contingency, that date will be pushed out as well, which is really, we come up against that a lot. And I know sometimes when you're trying to get a deal, you put in a sooner mortgage date, because we have reviewed income, assets, credit, and debt from the borrower to get the deal. But then sometimes with the contract, we do, work with the attorney and say, what, we held off for 2 weeks. We can't get a mortgage in 2 weeks. Clear mortgage, appraisal, if it's a contract, condo questionnaire. So,
All right, so now we're going down the road again. Maybe we pulled over for some inspection issues. Maybe it's all clear and clean. Our next stop on the road to clear to close is we're going to finalize the collection of all the data from the borrower. Now, in our shop here at Westport Mortgage, what that means is, as a loan officer, Nancy and I turn this loan over to our very capable staff of either Carissa, Terry, or Nikki, and they are going to process that loan or get it ready to submit to the lender. Now, the time frame for them to get it to the lender is about 4 or 5 days, as they look over all the pay stubs, the bank statements. Maybe there's a gift, maybe there's some kind of a piece of paper that they're waiting for from the borrower, driver's license, or things like that. One of the things that we tell the borrower is, the quicker you get that stuff into us, the quicker we can get it into the lender. Now, once Carissa or Terry or Nikki send it to the lender, the underwriting now starts. And underwriting turn times are quick. What would you say, Nance? Maybe 2-3 days?
Yeah, now they're great. They were a little slower a few months ago, but yeah, now they're great. And keep in mind too, a lot of this is happening at the same time. Some of this is happening at the same time. So it's not like straight linear.
Yeah, and actually, if you look at that, the appraiser is making his appointment. The attorneys are working on the contract. Our processing team is talking to your buyer and getting their docs and sending it into underwriting. So those are 4 or 5 different tracks all happening at the same time.
Right. And the docs in most cases are just updated pay stubs, bank statements, of course. Let's say their ID expired, like we have to notice all these little things. Are they getting a gift? Because, okay, so anyway, so,
right.
Okay.
So now we're going down the road. So we get the underwriting approval back, and here's something that you want to focus on as a realtor when we get that approval. And this might be 2 to 3 weeks after the very first, oh my God, they accepted my bind. Okay, so we've gone down the road a couple miles now. And now we've got the approval in hand from the lender. But it is a conditional approval. And the key there is the difference between conditional approval and a clear to close. So Nance, what do you think the main differences are there?
So, right, so we'll get an initial approval pretty quickly, and it will have outstanding conditions. And in our world, there are different words that mean the same thing. So it will be subject to, or it will be condition to, or this needs to be satisfied, conditions to be satisfied. And I say that just because if your borrower reads something to you, so you're, familiar with that. So some of the items that are outstanding, which are classic, typical copy of the canceled down payment check that the borrower gives to the attorney when they sign their contract, but that actually goes to the seller's attorney, and the seller's attorney will deposit it. So sometimes that doesn't happen right away, but that's one of the things. Proof of liquidation of if they're liquidating an investment account, it has to be go into their checking account. We have to see that it's available and the funds left that account. Did they take a loan from their 401k? Did they borrow from your 401k? So we have to satisfy beginning, middle, and end of that. The gift letter, the copy of the cash check or canceled check, homeowner's insurance, title work from the attorney. We send the title, what we call title request, for the title, for the CPL, for everything. If it's a condo questionnaire. So it's helpful to have all this information up front, to know who is the condo property management group. But so some of those are some of the items that we need. It's very thrilling, isn't it?
Right. And so the key here is I've got a piece of paper in my hand as a buyer, and it says I'm approved. What it actually says is, and if you do all of these things, we'll actually give you the money. And that's the key. It's satisfying the conditions that gets to the end of the road, the clear to close. And by the way, the definition of clear to close means there's no more conditions. Everything is done. So, for instance, if mom and dad are giving you a gift, but they haven't given it yet, then that's going to be a condition. Condition will read something like, okay, borrower to show the deposit of the gift funds from mom and dad. Now, maybe mom and dad don't want to do that till maybe 2 weeks before close because that money's sitting in their bank account earning money and they don't necessarily want to give it up. So it's going to be an open condition. And the reason we are telling you this is because everybody wants to know whether or not the loan is approved. And everybody wants to know whether or not the loan is clear to close, but those really are two different things. One of the things that Nancy and I do, and everybody here, Karen, Bill, as professionals in the mortgage business, when we get that approval from our lender for your buyer, we go through the list to see, is there anything in here that's a deal breaker? So for instance, if the approval says borrower to get homeowners insurance, well, that's not a deal breaker. We know they're going to get homeowners insurance. If the approval says attorney to provide CPL, and you now have in the chat box, you'll see CPL, closing protection letter. Well, we know that's going to happen. So that's not a deal breaker. But what if it says in there, borrower to explain the unemployment that they had for the last 6 months? Oops. Okay. All right. So, there's a question of the underwriter's asking a question that if it can't be satisfied, that could be an issue. So when we look at an approval, we look for easy conditions, things we know that are going to go along, fine. And then deal breakers. And then the deal breakers we discuss with the borrower. The reason is because you have a mortgage contingency. And what a mortgage contingency literally does is when you release your mortgage contingency, you now are saying to the seller, I can't use a lender turn down as my reason to not buy your house. So that means you've taken that safety net away. And so we're very careful when we read that list of conditions that there's nothing on there that can explode later, which includes things like don't quit your job, don't spend all your money at the casino, don't go out and buy a new car, and ruin your credit. I mean, those are obvious, but we've seen them all.
and pay your bills on time, you know, but those are basic things. And we send the borrower upfront. We're like, just, you know, notices, please don't quit your job. If, you know, I had someone call me last night, I want to go buy furniture. And I'm like, your debt to income ratio is a little close. Just don't do anything. Plus you're closing in a week and a half because they're having a 0%. You're going to order some furniture. We're going to need to see, you know, what your new monthly payment is going to be, what your bill is. They're not going to have that information, and they're going to have to go track it down, and it will gum up the works. But mostly it's like items that will come up. If we need a letter of explanation, or if they want a letter of explanation for certain addresses that showed up on the credit report, they, you know, they have to, you know, they have to provide that information.
Now, you know, I noticed somebody, let's see, I think it's Silva wrote, and this is a very good point. This is why we spend a lot of time on this point. She writes in the chat box, I work with an attorney who won't release a contingency until we get it clear to close. And, you know, that's you know, that's an attorney being an attorney. That's good. I get that. Well, I'll give you an example. I have a loan closing on Tuesday. Their mortgage contingency is tomorrow. Now, this was a quick sale. We were, you know, we were 30 days in, 30 days out. So they gave me till tomorrow to get the mortgage approval, which I had 2 weeks ago. And they weren't going to waive the mortgage contingency until, you know, until this date. Now, what we said to the attorney is, you know, you can go ahead and waive the mortgage contingency. In fact, if you like, you can start the closing process because you're closing on Tuesday. So look, we know that attorneys are very cautious and they don't want to put the borrower's deposit in jeopardy, and that's good. That's good attorneying. But in some cases, the lender is all done, and the only things left that are contingent, so to speak, are things for the attorney to do. So anyway, let's not get off this road to clear to close because we have plenty to travel. So
let's not get sidetracked.
That's right. No pulling over. All right. So Nance, we got the approval and we're working through the conditions, and now the appraisal comes back and oops, it's low. Now I just had one. I came in this morning, and of course my first email was your appraisal came in $8,000 too low. So this is a case of where things now have to get worked out. Now, worked out is a variety of things. And for those of you who have done it before, you'll know that it's a combination of everybody trying to make the deal work, including us. The first thing the borrower said to me this morning was, Paul, what does that mean for my mortgage? In their case, they were putting 15% down. And so in essence, with the appraisal miss, it meant that their down payment was really more like 10%. It didn't look like 15 anymore. The exact numbers were, they went from 85 loan to value to an 88 loan to value. So I looked up the rates for this borrower and I said, you know what? You're not going to get a higher rate and your mortgage insurance is only going to be a couple of bucks more. So if you want to close without changing anything, we can do that. Now, this, you know, we're lucky here because the appraisal comes in low, but the deal still works. A lot of cases, and you can ask some of the more senior realtors in the room, they'll tell you, actually, it's time to go back to the seller. You know, in this case, it was a condominium that was in the middle 200s, and the appraisal missed by 4,000. Well, that's not a big number. That's not a big number. First of all, I'm a little pissed that the appraiser couldn't find 4,000 more, but hey, that's another story. So what do you do with that 4,000? My first answer to the borrower was, well, if you end up with a different loan amount, you can still do the deal. But now comes time for a good realtor to go back and start renegotiating with the seller. You've got a buyer who has an approval and a list of conditions they're working through, and they've done the inspections, and you're maybe 3 weeks away from a close. So let's work out that difference and negotiate back and forth. Now, if you do that, and we hope you're successful, don't forget to tell us not only the new price, but any contingencies that happen, because they have to make it into the contract. And the lender wants to know also.
That is a good point, because then, like, I have a situation like that. Luckily, the seller's going to come down in price. It's not a big deal. And so we need an updated addendum to the contract that everybody needs to sign, buyer and seller, so to speak. So that's where you guys might come in handy. We might say, hey, can you get this? Or the attorney pretty much handles it, but just to let you know that we just need that updated, and that's fine. So, and that happens. I don't know.
Yeah.
If, you're still finding appraisals coming in lower. I'm not sure. What are you guys finding? Okay. So,
All right, so we're back on the road to clear to close. And we're approaching the closing date. So we're getting close. Hopefully, you all right?
No, I just
Hopefully-
looked at Lindsay's
Oh,
comment.
yeah, I see that.
Ouch.
Well, an appraisal comes in $150,000 under on a $2 million sale isn't so bad. When it does that on a $400,000 sale, well, that's a whole nother kettle of fish. But look, here's where we're going next. We actually have completed most of what we need to do, and we're now cleaning up the last couple of conditions. And so we want to actually, at this point, when we approach the clear to close, the closing date is in sight, and a whole nother department over in Lenderland gets the loan. So it leaves the underwriting department and now it goes to the closing department. The closing department, they're people who know math really well, and they're going to do all of the pluses and minuses, whether it's taxes, insurance, is there a credit for the oil tank? Are there realtor credits? Are there seller credits? All of that stuff is going to be going on. But Nancy and I thought it might be helpful if we also let you know what kind of information can you give us at the beginning to make this go smoother. And some of the ones that Nancy came up with were the condo. So Nance, what was that? The condo contact?
So if it's a condo, if you can find out the contact information for the property management company, so we can order the appraisal or find out what their process is right away. If
Yeah,
they're
the
in a
condo
flood zone, yeah, like in
questionnaire.
Japan, they're in a flood zone, or there's little odd places like in Stanford or certain near Westport that I know are in a flood zone, and I'll ask. And then right away, I will get a flood quote from my insurance guy, just because I want an idea so I can share that with them.
And by the way, the reason you want to give us that info, if you know it, is because if the buyer waits another 2-3 weeks before he contacts his insurance agent and says to his insurance agent, hey, guess what? I'm buying 123 Main Street. At that point, if they look it up and say, oh, well, you need flood insurance, that's the wrong time to figure it out. The right time to figure it out is in the beginning.
Well, in addition, when the loan does get submitted into underwriting, every purchase in the country does a flood certification, a flood cert, they call it, and to determine if the property is in a flood zone. But sometimes, like Paul said, it's not for a few weeks until later, and sometimes they might not be able to qualify because flood insurance can be a little pricey depending upon what zone they're in. So I just think it's best to know that up front and to let the buyer know, this is what your estimated total housing payment is going to be, and if that they can qualify for it. And then I just did want to go back to closing. So thrilling. But the CD, the closing disclosure, another acronym. The closing disclosure, the borrower cannot close until they have had the closing disclosure on the 4th business day of having been sent the closing disclosure. So if they get it on and they have to acknowledge it or sign it.
So wait, Nance, what does that mean? That
Yeah.
we send out a CD and then what happens?
Right. So the closing disclosure can be sent out before the borrower is clear to close to protect the closing date. The lenders have worked that in. It used to not be like that. It used to be not until it was clear to close, but if you're closing the next day, then you can't do it. And so there's a nice little workaround there. They will send, it's like a pre-CD. And what it will have on it, it's similar to the loan estimate, the LE that they got in the front, and there cannot be many big differences, but the numbers are often not correct. But they need to acknowledge this. I know Randy knows this, just to keep the wheels on the road, so to speak. Otherwise, the brakes go on and you get from behind, you get rear-ended, and it's not what you want when you're driving or getting buying a property. But so the original CD will go out, and that is very important. At closing, they will have a final CD, closing disclosure, when they're sitting with the attorney, and it's got all the final numbers. But the numbers go back and forth, and the closer and the attorney go back and forth on that. And then the attorney will tell the borrower, okay, we're closing a Tuesday, be here at 11 o'clock. You're going to need $63,240.32. You can get a bank check, or, Paul would like a bag of 50s. I would too, but, but
Unmarked.
Unmarked
50.
bills. But no, the attorney will tell them exactly how much to bring, because sometimes they'll ask me and I'm like, no, that's, your attorney, because if there's oil or how many days or, electric and stuff like that.
So again, the key to a good clear to close, when it comes to being our partner in the deal, I want to be able to give you complete communication about where we are. And as long as you understand the steps that we're going to go through, you'll kind of have a good idea of where we are along the road to clear to close. That's very important. A good realtor and mortgage broker partnership means communicating back and forth. So let's say, for instance, that I'm waiting on the buyer's mother to send the check. Well, if you know that and I know that, then we can both ask for it, because you're going to be in touch with them along the way. And you might be able to say, as some of my realtor partners do, hey, Paul told me that you're still waiting on mom's gift letter. Were you able to get that? In other words, if we're both double teaming and keeping track of important dates, we're going to move to the close, move to the finish really smoothly. It is a true partnership. And, it also eliminates a lot of surprises. You might have the buyer in your car on that day when I'm looking for something, and you'll be able to turn to them and say, hey, Paul's looking for this, or did you get your homeowner's insurance, et cetera, et cetera. It's all part of being a partnership, part of being a team.
Let me explain just closing protection letter. That's one of the items in title work that the attorney sends over. And basically, it's a contract really between the title insurance company and the lender, right? That they will, what am I going to say? That they will not hold the lender accountable if there's a mistake made from title or from the attorney, so to speak.
That's right.
That's right. But that's what that is. And sometimes the title work comes over later. Like I have a loan now, and the attorney will, sometimes they'll wait until after the appraisal is done and everything to order the title, because that costs them money as well. But we're in touch with them. We're in touch with the insurance agent because they need information from us. We need a paid receipt to show that they've paid for homeowners insurance for 1 year, and we need to know that there's enough insurance. So we have to get our language to them. It's always in the mortgage approval, but we'll still send it to the insurance agent.
All right, now here comes the time when you can ask some questions. We've gone all the way down the road. We've gotten the clear to close, and we're closing on Tuesday. So
Yes, good question, Silva. Employment verification, we're still doing employment, well, the lender is still doing at the end employment verifications. I don't think that'll end. The COVID overlays, the week-to-week paychecks that they wanted, those, they've gotten away from those finally. But they'll do just an employment verification at the end. Hi, does Silva still work there? Yes, that's all they really need to know. They don't do the income verification, that's already been done, but are they there? Are they still earning what they were told?
Now, what's important about that is when we first encounter the borrower, the very first time when we register and lock the loan, one of the things we ask for is we're going to have to call your employer a week before close to make sure you're still employed. That's never going to go away. And so do you have the name and phone number of a good contact in HR? And we want that person to be someone who does it for a living, can answer the phone. It can be the CEO of the company or the CFO of the company. It can be the business accountant, can also be someone in HR, and is familiar, can vouch for the borrower. And again, you have to recognize that that's one of those last minute things that it takes a little while. Some lenders are so big that they actually have a verification of employment department. They've got somebody who sits on the phone day in and day out and calls borrowers' employers. You know, hi, is Johnny still work there? Yes, he does. Is his title this? Great. Thanks a lot. Goodbye. But again, it is something that has to happen, and it's going to happen a couple of days before close because they want to make sure you're still employed.
Yeah, like for instance, we had someone called, so-and-so, I forget what his name was, whatever, Ron Smith still working there. Oh, we're having his retirement party right now.
Whoops.
So, you know, in a sense, you're not really clear to close until you close. However, you know, you have to have some faith in that in the first place. So,
You know,
Yes,
we've had
well-
this question. Somebody have a question?
Yeah, it's Cal.
Yeah, go ahead.
What do you do if you're with someone who is self-employed, has a one or two man, two people, not man, sorry, operation? How's that work?
So it's a very good question, and thank you for that. The thing about self-employed is you don't have a boss other than your wife or your husband who you report to. And so it's a little bit different. We don't do verification of employment on self-employed the same way. Can't call up HR and say, hey, does Frank still work there? What we can do, though, is we can get a letter from your accountant that says that you have been doing this for quite a few years, and they just, they don't do it the same way. When you're, for instance, if you are getting a loan and you're considered self-employed, they're not going to call you up and ask you if you still work there.
but they have ways to check too through business. Like I have a gal who closed this week and she's a therapist and she has her own business. She's had her own business for 15 years. And so they have they verify it their own way. So but that's a really good question, but they are capable of verifying that.
Thank you.
You're welcome. Other questions? Anything you want to know at all about the entire transaction from beginning to end?
There's a lot that goes into it. And it's a lot of overlapping stuff, just like you guys do, but it's almost like a puzzle. Everyone is a puzzle that has different types of pieces. We're all going to get to the same, we're looking for the same end, a closing, keys, yay. But it's just different ways to get there for different types of borrowers.
Nancy, you bring up a good point about the puzzle, because each piece of that puzzle has to come together at the right time. So we were just talking about verification of employment. We don't do that in the beginning. We do that at the very end. Same thing with insurance. We do that at the very end. So each thing has its place on the road to clear to close. Now, somebody just popped in a very good question.
Yeah, Lindsay did about FHA approvals and VA.
How do they differ? So who asked that? Where are you?
Lindsay, she's wearing a white shirt that says Lindsay Dix on it.
Hello, Lindsay. Okay. So here's the deal with
So funny.
FHA. FHA, they care very much about the health and safety of the buyer. It's mandated. They must.
And in most cases, it's a first-time home buyer who doesn't have a lot of home ownership experience.
Right.
You don't have to
So
be a
in order-
first-time home buyer, but I'm just throwing that in there.
Right. So in order to protect FHA appraisals, they want to know that there's no health and safety violations. So what is a health and safety violation? If you have a back porch off your kitchen and it doesn't have a handrail, or you've got a set of stairs going down the basement and there's no rail there either,
Wow.
that's a health and safety violation. Now, Fannie and Freddie, they're not even going to look at that. They'll look at the appraisal, they'll take pictures of it, and they'll call it what it is, and they'll move on. But FHA takes it a step further. It is their mandate, because it's the federal government, it is their mandate to protect the borrower, the buyer, for health and safety. That's why lead paint is such a big deal. If they see lead paint is
Well-
flaking up on the windowsills or on the outside of the house, the assumption is that those flakes are going to fall on the ground. If they fall on the ground, then a buyer's child or the buyer
Or the
Well, I haven't
animals
seen-
or pet.
or the pet, they're going to potentially eat the lead paint. That's a health and safety violation. So FHA is very conscious about that. Now,
Delicious.
FHA used to be a lot worse. They used to go in and rock the toilet back and forth to see if it was loose. If it was loose, it was considered a health and safety violation, and they would ding you for it and make you tighten it down. Well, they don't do that anymore. But for instance, if they spot a broken window, that's a health and safety violation. So it's going to have to be fixed. End of story. Now, we don't see it too often, but handrails and peeling paint are about the only two that we see more often than not. And you know what I say to buyers? Look, tell the seller to get the handyman, go out there, get on a ladder, scrape the paint down, the flake, slap a coat of paint on it, and you're done. You don't have to paint the whole house. You just have to scrape where the paint is peeling and put some paint on it. And go to Home Depot and buy that wood rail. It doesn't have to be fancy. It doesn't have to be carved wood. It can be, a temporary piece that you put up with 2 screws that go into the wall. As long as you can then legally say, I have a handrail that passes the health and safety violation. Fannie and Freddie, not so much. FHA, yeah.
I've even had situations like a garage, peeling paint on a garage in the winter. So, you can't really paint outside, but it has to be done. So the appraisers are understanding, I would say, in most cases. I've been very fortunate. You can just get primer. They're like, they don't, it's primed. It's great, sanded, primed. You don't have to paint it because it's going to peel off. Or I've had appraisers say, call me as soon as it's done and I'll run over there before it starts to peel.
By the way, this does bring up a good point. Thank you for this question. And that is, as a realtor, it is really handy if you know a guy named Phil who has a truck and a hammer and a bucket of paint, who you can pick up the phone and call and say, Phil, I got a $200 job for you. I need you to head over to Home Depot for me and knock this thing out. And the reason is because, quite frankly, a lot of times the seller gives you a pushback. Stuff like, I've been going up and down that stairs for 30 years. What do you mean? Health and safety. It's worked for me. That's fine. We understand that because there's no rail there. And so, that's fine. So again, it's a question of executing properly on the road to clear to close from start to finish. All right, who else has a question? I see one forming on Tanya's lips. It's like she wants to ask it. She's not quite sure. Not a thing, really. Oh, that's so good. That means we did such a great job. Um, Silva, you've been down this road, so to speak. What bumps in the road have you come across with lenders?
Oh, come on,
Nancy,
come on.
you want me to put you on the spot here?
No, don't put Nancy on the spot. Just be generic about
Brandy, no,
thi-
come on.
about things to watch out for.
The worst was the employment verification, which took like 2 weeks, and it was just nerve-wracking. This was my most recent experience. And then the other one was TD Bank actually gave wrong advice to my client, and they basically issued a pre-approval letter, TD Bank from New York. That's why I always tell my clients, don't work with banks, work with Westport Mortgage. Because actually 1 week before closing, we got the deal fall apart. TD Bank told them they refused. So Chase had done this to me, TD Bank had done this to me, Citibank had done this to me, and it was someone who was an employee of Citibank, sorry. So very many bad experiences with banks. And then we found a lender who was able to actually close the deal 2 days ago for the same client that everybody else said that they cannot help the client. Okay, so this is what I can share right now.
I mean, I have to say, I will say that I have had a few instances where we're getting close to close, and the employment, like if they're hourly, and if they were hourly or they make more bonus or commission, and a few months went by down the road and they didn't earn as much, and then their debt to income ratio, and that I have had that happen.
It
And
was
the
a
deal
school
didn't work
teacher.
out.
Sorry, it was a school teacher. There was nothing wrong with her.
No, but I had that happen with someone else recently, and it's terrible because it wasn't when I met this person, their income was fine, and then a few months down the road, they weren't earning as much. And I would have said, if I met them now, you need to hold off a little bit until your earnings pick up. So, that's
Well, and that's true. If
sometimes stuff happens.
if it can go wrong, it will go wrong at some point, at some time with some buyers. And we've seen it all. I believe it or not, I actually had somebody go out and get a car right in the middle. And not just a car, it had to be a $1,300 monthly payment. And I kind of wanted to, you do the knucklehead thing. It's like, what are you thinking? And it's because they don't think. We tell them in the beginning, don't quit your job, don't lose your job. But by the way, it's actually okay to switch your job as long as you're not self-employed. I have somebody right now who has an offer letter. They're not closing for another 2 weeks. They have an offer letter for their new job, which starts the week before. Now, that's why they're moving here. So it's intuitive, right? They're moving up from Maryland. They got a new job and they've got an offer letter in their hand. So they're not doing anything wrong. That's actually acceptable. You can take on a new job and start even after close, as long as you tell us up front. And we prepare, because lenders have a way of dealing with just about any scenario. Sylvia, do you have something?
Yeah, I wanted to say that this buying furniture situation had happened to me, and this is how I learned. And I actually asked them to go back and return, because it was like $5,000 and they were buying a $250,000 house. So, I mean, come on. And then this is how I learned to have a buyer's consultation, which includes don't buy the Maserati, don't get divorced until you close. And they laugh, but when you put it out there, they actually pay attention.
Yeah, no, you're right. We have a very nice flyer, and we'll dig it out for you. And Nancy and I can send it around. If you send us your email, we will send you the flyer. It's called the do's and don'ts. And the don't list is longer than the do list. And it includes all those things that we were just talking about. Some of Silva's favorites, don't go to Raymore and Flanagan and go crazy. Do that after close. And the do's are obvious also. Do keep your bank statements and pay stubs, et cetera. But it's
Pay stubs, right? Keep all your paperwork. But I think sometimes because people are anxious or not really sure that we are actual human beings, so that they don't really want to share information with us about, what could possibly affect, and then it kind of ekes out or it leaks out. So I say to people like up front, especially if something's going to come out, something negative is going to come out. It's definitely going to come out. But the more they tell me or us, the more helpful we can be, because we've dealt with so many different types of situations before. So if you're thinking, just ask. People ask, I'm thinking of changing my job. That's fine, that type of thing. But yeah, don't buy the car.
Christy, I got your email, so no problem. I'll get you that out shortly. Nancy brings up a very good point. And that is, when we first meet a buyer, we're talking with them, and we know they have a lot of questions, but one of the things we tell them is, you could tell us anything you want. You could tell us under every rock, you could tell us about every issue, about every problem that you have, and we will reinterpret that for how to get it approved at the bank. So if, for instance, if you tell us, oh, my wife has horrible credit, but she's got all the money, and so I need to have her on the note, but how do I do it? In other words, if you're telling this up front, we can troubleshoot the issue, and we can make plans to send it to the underwriter correctly, so that it's not something that's discovered and blows the deal up down the road. So we always encourage that kind of behavior. Tell us what you're thinking before you do it, and we'll let you know how to do it correctly or whether or not to do it at all. And that's really important, that they understand that that's their relationship with us. It's okay to tell us anything you want, and we'll make sure that it's done correctly for the lender. Nance, any other real big issues you can think of? We talked about how realtors can help us with condo contact, floods, cert. I was just thinking of one before. If it's a private road, and if you know that there's
a private road agreement.
We're going to have to get paperwork, and we got to know costs, and so it's little things like that. And the reason I say that is because it will get discovered, but it's not going to be till way down the road when the appraisal comes in, and now all of a sudden, oh wait, there it is.
It's a private road, and they'll say there's no paperwork for that. The seller will say, but there's nothing for that. There is something for that, because you have to have. There has to be something.
And we'll go ahead. In other words, we'll put it on our list of things to do.
And we look.
That's where you want that. You want it on our list. So you can help by knowing that about the house that you're that they're buying. I just want to throw one little quick word in. The other day Rick was talking about attorneys, and I want to bring up something about attorneys, because we work with all of them, and we work with so many attorneys, and we tend to know which ones have their act together, and which ones are like the state trooper who's going to pull you over on the road to clear to close. All right. You want to go with an attorney that has a professional staff, a paralegal or an assistant that does this for a living.
They do the heavy lifting.
Then if it's not going to be an attorney that has a professional staff, then make it an attorney that does this for a living. Because the last thing you want to hear is, oh, we can't close that day. I'm in court for the next week. I've got a trial coming up. I'm sorry, I can't handle that. No, sorry. You want someone you're going to get their complete attention. And you can ask you can ask us. There are tons of realtors who have really good professional staffs. In fact, I'd say their staff sometimes better than the realtor when it comes to handling your client. The realtor's the best. Then comes the attorney. And so you want to have a really good referral there. Go over and meet them after COVID. Go over and meet them, check it out, and see who their paralegal is and introduce yourself, get to know them. Because that person, you know how Carissa works for us, she talks to the buyer more than we do sometimes because she's in touch with them constantly along the road. Same thing with the attorney. So pick your partners really carefully. Nan, what else you got?
I wish I had a bag of 50s for everybody.
Good idea. No, that's why.
I would like to go for some ice cream right now. You've drove, where are we?
All right, should we take an ice cream break?
We drove to ice cream shop. That was our road. So thank you, everybody. We hope that you found this helpful. We hope that you will consider giving us an opportunity to work with your next buyer. If you have any questions, anything at all, seriously, just feel free to ask. We're happy to, chit chat.
All right.
Can you want my email address to send the do's and don'ts?
Sure.
Yes, please.
Okay.
Send me your email, nancymorgan@westportmortgage.com or Paul Leibowitz, but
either
Nancy
one.
Morgan's easier.
And we'll send you the do's and don'ts.
Actually, I wrote your names down, so I don't have all your email addresses though, but I'll send it out.
All right, super. So we are Westport Mortgage
Your partner
since 2007. Thanks,
Giddy
everybody.
Thanks a lot.
Great.
Thank you both.